2023. And if you just looked at an equal weighted US stock market, that was very close.
So let us begin, guys. I'm going to call the meeting to order here. It is 7 o'clock. We will begin. Okay. First item up is to consider approve the minutes of March 27th, the regular meeting.
Barclay with?
Barclay's not yet with us. He's email me. So we have the minutes. I think if you guys just one request to
Yeah,
add.
and I added those, so I'll send those out. Nothing changed for the votes. It was just adding the roll call to who attended the meeting. So if everyone is okay with me adding that and sending it afterwards, they'll look the same. They'll just have the roll call on the top of them. And going forward, they'll be that way as well.
Okay.
Wilmington.
When you are ready, if someone could please make a motion. The minutes.
Oh, I do approve it.
Okay, a second? Thank you. All in favor to approve the minutes as requested with the roll call? Please say aye.
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 Wilmington.
Aye.
Do we have any objection? Any abstain?
One abstain.
Okay.
Russ.
Eric?
Russ, you abstained?
Russ is
Yeah.
abstaining. Okay. Okay. All right, guys. See, we don't, has Barclay joined us?
Should let Vanguard go, let Brian do his thing.
No, we can't because we've got the.
Oh, right.
Wilmington.
We are,
Barclay's on.
There's Barclay.
I retract.
You're just muted, Barclay.
Here we go. So guys, it is now, the next item up is to talk about the OCIO process. So we have Barclay Douglas, our consultant from Criterion Advisors, here with us. He has guided us through this process since January, and we're delighted.
Wilmington.
Committee has worked with him. We've whittled the field down from 12 very good respondents to the targeted RFP to 3 semifinalists. The semifinalists were SEI, PFM, and BlackRock. We had all 3 in last week for about an hour each. Very thorough presentations, which were preceded by a very, very thorough vetting by Barclay. No
Wilmington.
And we came to the subcommittee, the 3 of us came to, I think, a unanimous conclusion that we felt that BlackRock was going to be the firm best positioned to serve us going forward. From my standpoint, and I'll let Ken speak, Tom is not able to join us tonight. He was the other person of the subcommittee who voted. From my standpoint, what I really liked about BlackRock, apart from the fact their fees were
Wilmington.
I'm very, very, very happy with their fees and their willingness to hold their fees in writing constant for 10 years. I like the fact that they're able to bring on our legacy holdings and fold that into their analysis, to their portfolio analysis for us to allow us to make better decisions going forward. I like the fact that they have a very, very strong alternatives platform and breadth of knowledge of alternatives if and when we want to
Wilmington.
holdings. I really like the fact that they have a very sophisticated suite of technology in their Aladdin platform that we can tap into if we want to ask questions or do scenarios and whatnot. They have a really good team. We met the team. We met the team. I think the team will get along very well with our town and with our board. I really also
Wilmington.
fact that we seem really important to them. And to me, that was kind of a big deal. That as big as they are, this is not an area that they have focused on, and therefore we are going to be pretty sizable as a client to them. And they seem very determined to expand into this market. And so I think that's an important feature and opportunity for us. We're pretty big, and you can see that in the presentation I I think that was on page 12, where you can see that we're going to loom pretty large for them. So they did a great job. We scored them with Barclays' help on their client communication skills, their back office capabilities and technology and operations, their performance reports, the longevity risk that they would bring to us, their cost. The considerations were whether or not we would be important to them, whether they were comfortable with our Another thing about BlackRock is while they understand we're very passive oriented today, a future JRIP may want to be more active and BlackRock could be able to accommodate that. They can advise us on the alternatives. They confirmed our client list. They have they have the active management capabilities, and we're able to stay with our current custodian, right? And so they were able to work with us in that framework. They seem pretty comfortable. We can transition this on time, right? And I think we'll be in good hands. Ken, I want to turn that to you, to your thoughts.
Well, first of all, not much more to add because you just gave a very thorough overview. Barclay, first of all, did a really outstanding job for us. I really was impressed. He boiled down an extensive universe of candidates to a manageable list of candidates. Boiled it down to a group of semifinalists, I guess you call three, something finalists. And to be perfectly honest, of the three, only two were really meaningful possibilities. After we talked to them, I think we all agreed one of them wasn't really up to the level of the other two. And the only thing I would say is that allows me to strongly urge everyone to vote for the choice that the subcommittee will make. That is that I think anybody's concern with BlackRock who follows the markets at all would ask whether or not they're too big and whether we get lost there. That would be the only, in my opinion, stumbling block to choosing BlackRock. And I was extremely convinced that they have some sort of boutique business within this giant firm. And like Carolyn said, they have tremendous experience handling various types of pension funds and so forth, but will be probably their biggest public fund initially. And I always like when someone asks for the business. And at one point, I forget which one of the three said, we want your business. We really want your business. And to me, that's a final icing on the cake. So if my opinion means anything, I would strongly suggest that we made.
Barclay, did we miss anything?
That was about as comprehensive as it gets. I would say that we're targeting 30 days for the transition, which BlackRock is highly confident that we could do. The only stumbling block occasionally are negotiating over the contracts. And I've actually seen a BlackRock contract, and I think you'll be pretty safe. They covered every base. If we ever get more active, they have that capability, and care a lot about their counsel on what to do going forward with alternatives, that being private real estate and private equity.
And Barclay, if you can hear us, could you talk to us just a bit about what your role is going forward? I know you're not finished with us yet.
Well, what I want to do is marshal the transition through and make sure that that's going, kind of a every 4 days basis, because this is something we have to get done right. So every 4 days checking with BlackRock to see how it's going. And then I'll be involved in recrafting the investment policy statement, which shouldn't be major surgery. It should be fairly low key, but we do need to adapt it to BlackRock's terminology. And then there's a gal named Caitlin who will help us through the asset allocation process. And yes, we know we did that back in 2019, but it's probably time for a refresher. They do an excellent job of taking a look at the liabilities and understanding our liquidity needs. And we'll just kind of redo that, have a relook with the expectation that there's not going to be a change per se.
Wilmington,
there might be some nuances. And they may actually have us take a look at a couple different asset classes for consideration. And then finally, about half the time with an OCIO search client, they hire me on an ongoing basis to kind of watch over. I would not recommend that for you at this point. I only charge about $10,000 a year on that. But as long as you're completely,
Wilmington,
don't worry about it. I just don't think that I would serve much purpose. However, if you ever go active and want to bring me back in for counsel, I'd be happy to re-engage. Or if anybody on the committee has a question, I'm happy to answer those gratis. That's something that I do on an ongoing basis. Besides, you had such a wonderful committee to work with that yeah.
Wilmington,
Appreciate that.
Are there any questions? All right. Hearing none,
Is this a vote of
take
the
a vote.
full J-Rib?
Motion to,
Bruce,
BlackRock is our,
all right. We have we have a second? Second,
Wilmington,
all right. All in favor of BlackRock, selecting BlackRock as our OCIO? Say aye.
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 Do we
Eric
have,
Caliper, aye.
Okay.
we have
Wilmington,
boost? Any,
Congratulations.
all right, motion carries. Thank you.
It's actually.
Thank you. David and I are signing out.
Wait a minute, I have one
See you
question.
guys.
One
Wrapping up.
quick question. Carolyn, I assume you get to call the winner and I call the two losers? Is that the way this goes?
Wilmington,
Yes.
Good night, guys. We have to
Good
close the
night.
meeting.
Okay,
Thank you.
Good.
Got
for
it.
looking at
Thank
it.
you.
Just one comment here, personal privilege. The board, I know Carolyn's doing her job, but the board owes Carolyn a pretty big thank you, genuinely. Because I have no particular experience with this, but Brian does. And we moved through this process quickly, but never rashly and never without, proper consideration.
Wilmington,
I really think it was handled great, including Barkley, if he's still on.
Thank you.
thanks. Thank you.
Thank you. Thanks so
Here, here.
much.
here, that's here to all that
Yeah.
participated. We appreciate the effort.
First meeting, she gently gets a round of applause.
Okay.
All right,
NBA
playoffs.
No, it's done.
Thank you.
more,
Okay.
a little bit more. Thank you, guys.
If I'm able to present on the iPad, because
Okay.
our laptop is, so I signed in, you'll see I'm the unverified there, and I wanted to see if I'm able to
All right,
this for you.
all right, guys, great. So we're moving on
yes.
to our last,
Is this our last?
this would be it, because our next meeting is not until July.
Wilmington,
Moved over.
correct.
This is it. This
Last
is our
official meeting, yeah.
last official
Sweet.
review with Brian.
Bittersweet, absolutely. I mean, it's actually almost like 4 years to the day because the day the performance started with Vanguard was April 1st of 2020. So it is basically 4 years. I thoroughly enjoyed working with the entire J-Rib and all the people that, most of the committee is still here. Ken's back.
Back.
Wilmington, with you too long, like
Right.
when you hired Vanguard, you
Yeah.
rolled off.
Yeah.
I think the results have been good. I think it's on strong footing. I think you have a good choice of a new provider that gives you that optionality that you talked about.
All right.
No, thanks.
We are able.
Impressive.
And then to that point, just talking about transition is I'm still reachable. I'll still, in conjunction with our back office, make sure that will smoothly to BlackRock. That's performance reporting. It's anything that goes along with it. So I'll still be reachable to help with that process along with any of our back office. Part of that, and this was an ask that goes back a month or two, just so the whole J-Rib knows, is that Carolyn had requested months ago, is like, make sure all the documentation comes over. So it was quite willing, but that did go over to Caitlin. It's 100+ documents. This is performance reports, statements, all the presentations that we've done. So all of that data, I mean, all of that should be in possession of Town of Fairfield.
That gets in the minutes, please.
Right.
That's all been done.
So, yeah, it's all been,
Date, perhaps if we have it, if you have the date you sent it over to her, or maybe the date. of
This,
receipt.
you can just-
Does that
as of last week, and Wilmington
Fire
Trust-
Vanguard?
the entire Vanguard file has been transferred over to the town.
Yeah.
Yep.
The full record.
Statements, performance reports, presentations.
Record.
And then just for our knowledge, the Wilmington Trust is obviously the custodian, but what's not at Wilmington Trust is all the privates, right? So there are different portals for Principal, for Lexington, for Mesereau, for Harbor Vest. Like Wilmington Trust can't custody those private assets. They get feeds, right? I mean, they get statements. Like part of what we do is every month when we get statements from Lexington, Mesereau, Principal, we provide those to Wilmington Trust. BlackRock will have to do the same thing. So they incorporate it into all of your reporting as their custodian. But just to be aware, like those are other portals that are out there besides just Wilmington Trust. Yeah. So
Said monthly reports. You get monthly.
Quarterly.
reports. You get quarterly. You get quarterly.
Quarterly.
quarterly from the old, yes.
Quarterly online.
Monthly, that's pretty good.
Well, they can get market values, like for instance, like Principal, like we get monthly market values, but performance reporting for the alts is quarterly. And it's usually a lag, quarterly lag. Yeah, so for instance, the performance report that we're going through that's as of March 31st, but for private equity, private real estate, those values are as of 12/31. But the benchmark, and this has been a question in the past, the benchmark also is reflected on the lag, so it is, apples to apples. Mhm.
Can I ask you the same question I've been asking everybody, and I know there's no answer to it. So I'm just keep figuring that I just keep asking the question, like a 5-year-old, somebody's going to give me an answer that makes me happy. But the alternatives, right, not to get into a discussion right now about their goodness or badness, but the reporting is a problem, right? Just fundamentally, because it is on a lag versus the rest of the portfolio. So it makes it difficult for anybody, particularly board members that may be really somewhat new, to try and figure out how we can truly look at our performance, because we're getting numbers that are mixed and matched, so to speak, right? Is there any way, like, I'm just thinking out, I asked this of all these guys, is there any, it'd be hard to do, but is there any way to have a projection with a big asterisk or something? Or, and again, this is more of as you're departing, I'm just curious what your opinion is. Is it possible for a big place like BlackRock or whoever to, knowing the market and all the access they have to all the funds, to give us a number that we couldn't necessarily depend on, but could allow us to have a report on the quarter that reflects the current quarter? Right, because we really, by definition, we never, until we close these investments out.
It's always a quarter
I think
lag.
it's somewhat of a moot point anyways. It's not a liquid asset. So if you need to draw down anything, like what is the value of that matter? Yeah, like,
Well, I
what's
think
a lag 3 months or not. I don't think it's that important. You're paying them. You're kind of paying for the smoothing of your assets and
That's a fair point.
that market and.
The short answer is I don't know any way to get an estimate of that, because it's not a homogeneous market. It's all different types, even private equity, private real estate, it's all different.
Assume a market beta. That's what you would have to do.
Yeah, that's a good point.
And be like, okay, make your assumption. Is this
Ken, to your,
levered equities, like levered applied equities plus some alpha, then apply what you think your beta is to it. And then you're gonna be
Maybe
subject to
something we
what
could do
those-
internally. I'm just talking about in terms of,
Mark coming from. That's what you're really, and I remember asking this question to somebody, I think it was Harbor Vest. We were saying, well, the markets are going south, and yet you're saying there's no depreciation in the private equity.
This is
All a function of how much is invested and who's giving the mark. And if the manager's giving the mark right away, that sends up a red flag to me, sort of a question, because they're going to have a bias towards maybe giving a more positive mark than the real.
Or maybe they don't even know.
Yeah, I mean, and the private equity,
Crushed it in, 2022 and then they lag in 2023. Like that's what people want in their portfolio though, when you're paying for this.
Yeah.
For this.
There's also a different question, I think. And again, I apologize. I really don't want to do this because I don't want to go long term on this, but there's always a freebie that we can compare things to, right? A freebie would be some sort of mindless, I don't know, 70-30 public markets portfolio. I'm just saying that's a freebie that we should always know. That's my point. We should always know what our alternative is, which is, it doesn't have to be 70-30, it could be 60-40, it could be 65-35. I'm just saying we've added spice to our portfolio for a reason, right? I'm not making that argument right now. We've decided that there's a smoothing and there's a diversification and there's other reasons we do it. But I just think, I don't want to sound conspiracy theorist a little bit here, but the lag makes it very difficult for us to truly know whether this is adding value or not. That's my problem.
well, in the short run, I think there's, in a year timeframe, I think there's fairness to that. But also, every investor is in the same boat. Everyone's got a lag. It's not any different for Fairfield. The only thought that has come to mind as far as like, if you wanted to get some wild estimate, is using like a US small cap type of index, right? Not an S&P, because these are generally speaking smaller
Aren't
companies.
there any like ETFs that try to track the privates markets? I think there are, aren't there?
There's ones that they try to replicate listed
Right.
private equity, but they're like, oh, we try to pick companies that we think would be buyout targets or like takeover targets for private equity. And so if we hold those, and that should end up okay. The research on it's been pretty poor.
Is that right?
Like it's not, doesn't have a very high correlation or beta to what
Is that
you're
right?
trying to
Curious.
privates overall. And then if you jump into, analyzing, if I own, if you own BlackRock or Blackstone, or I guess Apollo or Blackstone, whatever, even those publicly traded, private.
They're so diversified now.
But they don't really track investments either. So
Or, but
Good question for BlackRock. I don't want to.
and that's exactly the right question to ask BlackRock, because there's a huge performance variance between a top decile private equity
Correct.
performer and the whole private equity universe.
Yeah, Barclay.
And so, if you've picked them very well, you will outperform, right? So that's another question, right? I think these are questions that we're gonna want to ask.
Yeah, definitely.
And really scrub clean, in a new way.
Yeah, I planted the seed. Let's move on for when BlackRock comes in.
All right.
Yeah.
Performance review. Let's do it. This
Okay.
is it.
Okay. And even though it's the last meeting, keep the questions coming.
Well, I'd like to hear your words as you depart, because I'm going to be getting your advice going forward.
Right.
4 years.
Yeah. 4 years, it went fast, yeah, COVID and all that. Yeah.
And that was a crazy time, April 2020. Wow, we had some crazy performance then. That market went down fast.
For sure. That's definitely one way to put it.
You know of what you speak.
For some reason it's lagging out here, but let's start, on page 4. I always just kind of recap the markets before we get into the total performance of the plan, because so much of the portfolio is following these broad market indices, right? So that's why it's kind of relevant when we get to the performance section, and I don't repeat all the numbers. So this is all through March 31st. Clearly, this is not your fiscal year-to-date performance, which is in the performance report. But probably no surprise that equities have, at least through March, have continued to do very well. So equities have done really well. The other trend that is still with us is that US equities have continued to outperform international equities. Just like as a side note, like I almost feel like there's a capitulation happening. Like every meeting I go to, or every market pundit I tend to hear is like, oh, why do we even have international equities? Why do we need it? You know, can we get emerging market exposure through global equities? It seems like the reaction to international markets is just so sour right now because they've lagged so long. But I don't think that diversification benefit goes away. When does it switch? I don't know. I don't think anyone knows. There's certainly still a big valuation dispersion between US and international markets, but I just kind of wanted
a
to
good point. I mean, the international markets have lagged longer than the intern Ben has been alive,
and
literally.
well, it goes in cycles, right? And it's really been since the global financial crisis. And we've kind of talked about this in previous meetings, that not the only reason, but a big reason is how the markets are made up. US markets have a lot more tech exposure, and we know how well the tech names have done these last few years. And so that's part of it. It's probably not all of it. You know, you could say a better entrepreneurial spirit in the US. There's other things to point to, but certainly the tech stocks have been a part of it. If you went back to 2023, and if you just looked at an equal weighted US stock market, that was very close or on par with international markets. It was just those Magnificent Seven that carried the US market upwards. So I just wanted to kind of give that context. So you see year to date, US stocks up over 10%, 1 year over 29%. Very stark. And international stocks still strong absolute, but just lagging the US markets. Through fixed income in that center section of page 4, we've seen interest rates go back up this year as, you know, economists or everyone continues to push back of when the Fed is going to hike. I mean, coming into the year, the market was saying there's going to be 7 cuts. You know, that's gone down to about 2 right now. And now there's a small percentage, small in the tail, that some think there could even be a hike, you know, with inflation still not coming down. But that's just a backdrop of US bonds on a year to date, just the first 3 months of this year, negative. They're still positive on a 1-year basis because of how well they did last year, which was a rebound from the previous 2 years. We include non-US bonds in the portfolio. It's that middle column, it's hedged. What that, again, that means it's currency hedge. We don't want currency creating a lot of volatility for what's supposed to be a conservative, a fixed income allocation. But you could see the benefits of having non-US bonds up a little bit in the first quarter. That's different from the US bonds. And you could see on a 1-year basis, non-US bonds up over 5% versus the 1.8 for US. You know, you're getting diversification of you know, central banks, right? Different central banks doing different things at different times. So with that said, as a backdrop for the US, for the public equity, public fixed income markets, quickly on page 5 is just looking at the different components. It's certainly been led by, you know, the orange bars that jump out on a 1-year basis, the large cap stocks and the growth stocks. Well, the tech stocks are large cap basis, their growth. That's why you see the big dispersion on the large cap side and certainly between value and growth. And then on page 6, it's what's relevant to the fixed income markets is just looking at the yield curve. What are the interest rates along different maturities? It's still in an inverted yield curve where rates are higher on the shorter end versus the longer end. That's an anomaly, but this is the longest, at least from a 2-year, 10-year basis, like the longest inversion of the yield curve. We're on like 22 months now that it's been inverted. So while it's always talked about and has been a good predictor of a recession, it never tells you when, you know, that's going to happen. So we're still here, you know, in this inverted space. You know, we are duration neutral in our fixed income portfolio. We just own the market, which is about 6 years. And, you know, last year was an indication when rates came down, your fixed income would do well. That's probably the biggest, just staying on fixed income for a moment, that's the biggest change in the last 18 months is how much return that you can get now from fixed income. If you're looking out, what's referred to in the markets is the equity risk premium, like expected return for equities over fixed income, I think is lowest the equity risk premium is the lowest it's been in about 20 years. Like that dispersion of expected returns is so small because equity valuations are so rich right now and interest rates are still high. So there's not much of that gap that says, oh yeah, it's a good time to buy equities.
Has there been I know you're obviously leaving one place and
Yeah.
joining a new place, so your level of information may be the lightest it's going to be, right? But is there any movement by either advisors to their clients or clients to bulk up on fixed income and lighten up on equities for the exact reason you described?
I don't think I haven't seen that with any of the clients that I've had so far. Like, so for instance, like Fairfield is still a conservative portfolio at 60-40. I think I haven't seen that shift. As far as out of equities, and most of the institutions that we work with are longer term in nature and don't believe in tactical or coming from Vanguard. And so we haven't seen that shift, but I think, you'll probably do that asset allocation analysis with BlackRock. You'll see that.
I read they have a different target, but corporate pension funds, whatever ones are
Yes.
are left,
Yeah.
have significantly rotated into fixed income, in part because their bogeys are usually corporate bond.
Correct. The yields on corporate bonds.
Yeah. So they're looking at these yields where they can get 5, 6, 6.5%, depending on the quality you're willing to take, and lock that in. Again, it's a different animal.
It's a different animal, mainly because of what's happened in the corporate bond space is that the corporate pension plans on average are about 100% funded right now. And so corporations want to take that risk off the table. They have done liability matching. So their liability has a duration. They want to match the bond duration to hedge all that interest rate risk. So if you're 100% funded, you don't really need to take that equity risk anymore. So absolutely agree with you. In the corporate space, it is heavily skewed to fixed income because of, for different reasons. I did look, Milliman puts out a study on a frequent basis, like the funded status for the 100 largest public plans hit 78% at the end of February. I think Fairfield is still comfortably above that. But you could see how different, like the average funded status for government is different versus corporates.
Yeah.
Yeah.
You're right in there. We had a tough year.
Yeah.
We had a tough year this past year. Well, partly because it was June 30. It was
Correct.
a tough day.
Correct.
And then we had a higher costs, right? Higher liabilities and costs because of police and fire. We had early retirements. We had some.
Well, we're in the ball. I think we're in the mid 70s.
We're in the park. We're in the ballpark. It moves, right?
Yeah, and this,
Very-
and it's not apples to apples. This is as of February. You're talking about a number as of June. It's not,
It's a market snapshot, right?
yeah, I wouldn't compare those two numbers.
And they will adjust it, as we found out from the ratings agencies, they adjusted to an 8% discount rate, and we're at 6.9.
Yeah, I wouldn't use that.
Numbers are gonna be different, other funded.
So that brings us to page 7. This is the performance of the pension plan. So I'll focus, I talked about the first quarter, it was positive on an absolute basis. Fiscal year to date, maybe I'll focus in on that number a little bit. You see 8.52% is gross. I always talk about the net number of 8.5. That's just accounting for advisory fees to Vanguard, right? The policy benchmark, 10.36, so it's like, okay, there is a big deviation from that. We haven't seen that the last several years. That, when I get to that page, is really almost entirely attributed to the private equity. We talked about the lagging markets. So the benchmark that we use for the private equity is the Russell 3000 index plus 3%. So we're talking about, the public equity markets have done really well, as we just covered. Private equity valuations have not certainly gone up in this environment of not a lot of deal activity. So they haven't been marked up. And again, you'll see that when we get there. And then just above all the performance, looking at the asset allocation versus our targets, you'll see on the public markets, we're a little bit underweight, and that overweight is to the private equity. mainly. But we do have a 10% target longer term for the private equity. So I think that'll get adjusted probably as you're moving to BlackRock. The real estate allocation now is almost really on top of our 5% target. If you went back a year or so ago, we were up at like 7 or 8%, again, because of the lagging nature of the private markets.
We knew that one was coming.
Yeah, we knew that would adjust and
We had made, just to bring you up, we knew that one was coming. We had that, we knew it was either, if I remember, it was either redeem, ride it out.
Yeah.
We had that conversation and then it was like, that went out.
And I'll make a couple of comments on principle in the real estate market when we come to that slide. So if you were to page forward to page 8, this is just a snapshot. This doesn't show the individual funds. This is at the broad asset class level. But if you go to page 9, since we're talking about it, so on the fiscal year to date basis, the top of page 9, that's where you see the private equity, right? So you see a mark of 0.83% versus 20% for the Russell 3000 plus 3% has been the historical bogey for town of Fairfield's private equity benchmark. Now that was, and I think someone also made this point, that was completely reversed. You go back a year or so ago, 2022, equity markets were down double digits, 19% or so. Private equity valuations didn't take that mark. So you have this lagging effect over time. There's still high correlation between private equity and private and public equity. It really just comes down to manager selection in this space, since you can't index it away. Right below that is the private real estate. So that's been a better story from a relative perspective. You see on a fiscal year to date, real estate down 7.9, so not great to have the negative return, but versus its benchmark of down 9.1%, principal has continued to add value. So this is on a calendar year basis. This was in principal's commentary. So this is just on the real estate market. 2023 was only the 5th calendar year out of 45 years where the private real estate benchmark was negative.
Out of how many years?
45 years. 2023 was negative. It was only the 5th year out of 45 years that private real estate was negative. And so it's been a good diversifier. We've considered it in that bucket of risk reducing. We don't have it in there for growth. And then the comment specific to principal is it was the 13th consecutive calendar year where they outperformed the private real estate benchmark. So principal's, added value, certainly the 4 years I've been here, but longer for the town.
They're are they a fund of funds, right? We're in this fund of fund strategy or we're?
No, that's HarborVest. HarborVest is a fund of funds with
okay.
primary, secondaries, and co-investments, but no, principal is what's referred to as like a core plus real estate. But it's only principal that manages that.
Right, I know that, you're right. So they're just in a different.
Yeah, they're buying,
across the board, yeah.
Right. Just staying on principal is that, they still have that redemption queue. They're seeing more activity in the sense of in the first quarter, they were able to pay out 20% of their redemption queue. So that's larger than the past. So
Yeah, it's a
big
meaningfully different number than where they've been.
Absolutely. So looking for the number, their inbound queue is 740 million. The outbound queue is at 315 million. So we still have more money that wants to come into it, but they still have a redemption queue. They've only been able to meet smaller portions each quarter, but certainly the first quarter was the biggest. Those are the main comments, with respect to performance, at least for the pension plan. I do have a comment just to give you the committee basis on private equity. So just year to date, it's just the first quarter, but we've had 2.6 million in capital calls from our private equity investments, Lexington, Mesero, and HarborVest. the biggest amount was from the HarborVest 2022 fund. So 2.6 million in calls. Distributions in the first quarter are 756,000. So that I looked at it versus 2023. It's kind of been on pace, but down tremendously from 2022 or 2021. But there's still distributions, but it's certainly been smaller.
When there is a capital call, what do we fund that out of? Is that out of short-term reserves? Is that just like overall, like, do we get to pick what asset class we sell down?
We do. I mean, we typically have done that. So if it's private equity and there's a call, we typically take that from the public equity markets because we think of that as your growth or your equity bucket. Doesn't matter if it's equity or private or public. We kind of look at that in that bucket of return-seeking assets. So
Is that where we currently park the uncalled capital is in public equities? So
yeah, I mean, you could take it from anywhere. I mean, it could come from anywhere.
I'm just wondering if that's an active decision that's made, or
it's
passive.
It's in.
Or is that like, here's the rule and we run with it?
Sure. So
depending on market conditions, you may not want to sell down one asset to fund another, or you may want to be selective about what you're doing.
What we're looking at is on page 7, whether it's the investment policy statement or page 7 captures what our policy targets are for the asset classes and the sub-asset classes. We're typically looking at, are we overweight or underweight a particular asset class? And therefore, that's where we'll take the funds from, as opposed to what do we think what asset class is going to do good in the next few months, which we don't know. So it's really rebalancing to our targets. And that actually happens on a monthly basis because we have pension payments that go out on a monthly basis. So where do we take that from? We look at where we're overweight versus our policy target. So it's not automatic, but we're always looking at it in terms of where are we versus targets.
And it might not surprise you, but we've had quite a few capital calls recently. Right. They've been busy.
Yeah.
They've been putting capital to work.
It's good.
Some in the secondaries they just did in Asia. So India, China, Southeast Asia. So they're diversifying it, not just US, domestic.
Correct.
And even though it's a small portion of the vintage allocations.
Right.
But
yeah,
that's where.
How much of the 2.6 was HarborVest versus the other? Most of it.
The 2022 fund was a majority of it. It wasn't the only one, but I don't know the percentage off the top of my head. Something I could look up quickly, but it was the lion's share was that 2022 vintage. So of the capital call.
Oh, yeah.
Yeah.
What was that?
So yeah, HarborVest has been in here. The other private equity managers have been in here in years past and said, some of their best returns have kind of come in times of dislocation. So I hope that continues to work well for the Fairfield over the long term, but this has been a good time to put some capital to work. Because the other funds, as you recall, and they're all listed on page 13, those were funds that were back in 2009, 2013, 2017. So those are the ones that are providing distributions right now. You're still getting some calls from, say, like Mesero has the 2017 fund, Lexington, the 2017 fund. There are still some calls from that, but the lion's share, as you'd imagine, is the HarborVest.
We have a lot of it that hasn't been deployed, so.
So when
absolutely. They're, even though my questioning like, the valuations, well, if there are valuations are not going up as high.
Right.
It's time to buy low, you're
Right.
going to end up eventually sell high.
Right.
You exit these things.
So on now, and I'm glad to backtrack anywhere, but on page 16 is the OPEB performance. Much stronger from an absolute perspective and even relative. Recalling there's more equity exposure in the OPEB portfolio. So fiscal year to date, you see a return of over 11%, 11.14. And then that's relative to the policy benchmark of 10.63%. So what's driving the relative outperformance is principal, right? There's no legacy private equity in the OPEB plan. So that outperformance is really being driven by principal, which is in the OPEB, 10% of the portfolio, versus 5 for the pension. So that, I mean, page 16, it would be the main one I would hit. The other pages I have in there for background, but they're the index funds and they're the same principal fund, which I just covered. What questions or do you have performance, markets, or anything that I didn't cover?
No.
Yeah.
We'll miss you. We'll miss you.
Yeah. Well, I don't know which way or how I give you a resource, but you'll be in good hands, but
Well, if we have any problems, we'll call you.
Look, yeah, if you have any problem, I look forward to staying in touch, and if there's some way I could be a resource, I stay in touch with a lot of clients, and I would like that.
A smooth transition will be the best thing you can
Thank
offer
you.
us right now.
Is Mercer not in the OCIO?
Mercer is in the OCIO business. They're actually the largest OCIO provider out there in the industry. It's just they don't serve public plans,
Okay.
as they do work with public plans, but typically just with alternatives. They don't do the entire portfolio for public plans. So they do have a lot of public funds as clients, but not where they serve as the OCIO over the entire portfolio. But they do work with public plans, and that was the reason for having to kind of sever ties and do a search here.
And Brian is now an employee of Mercer.
Yes.
Yes, he's moved over to Mercer. You're wearing both hats.
I'm wearing both hats because I'm still serving my public fund clients, but I'm at Mercer, yeah.
He's double teamed.
Double dipping.
He is double dipping. Yes, but it's
Once
good
you-
for us.
Once you fully move over, who will you be? Is it mainly corporates that you'll be working with, or?
At this point, mainly corporates. I mean, that was the other segment of my client base, is about half was publics, the other half was corporates. So at least initially, it's, all publics. Excuse me, all corporates. Freudian slip there, yeah.
Yeah, no, it's, that was the peculiarity of this, is that Mercer doesn't service publics, and Vanguard was exiting the business. And so it was like, whoop, there we go.
Who's the next person that's gonna be the liaison?
It's a team of,
Somebody here already?
mhm, it was a requirement. It's a team of 4. I think we'll see probably 2 people here. Those are them. We're likely to see, the 2 of them on the right. Caitlin she'll come in, she'll become the client service person, and then, Danny and Caitlin. Both men. But they're available to us, and they will, they will host. We'll also be entitled to attend their events, right? Their educational events too. So.
I think they also implied to us, and we should probably ask them when we see them our first time. There was a bunch of us were asking about they made a big deal about this Aladdin, which we think about beyond what they told us. I see a shrug, maybe it's not that great, but they made it out like it was the next coming of Bloomberg. So, and they implied that there was a consumer facing, that there was a variant on it that we might get access to, so we could have, I'm not sure we wanted to tell you the truth, but if people wanted to get a little more ability to log in and dig into the portfolio, they imply, I don't think, Kyle, did you get that answer? I didn't get it. Sorry?
Not a paid position.
Good point, yeah. That's why I said it's probably not something we want to necessarily, I'm not even sure it's a good idea, to tell you the truth. Much involvement probably is not healthy, but they did, for those who might care, they did talk about that.
We get visibility when you go to the system, into the private equity, into the companies, they, different portfolios, you guys see it, moving, whether it's valuations or not. Here's what's inside this particular fund, this strategy of a company. So you get more visibility, more transparency. Pretty good.
Can I ask you guys around the table here, just since we'll be transitioning, we're gonna try to move it quickly, right? Do we want to keep to our schedule of meetings, right? We become less frequent. We meet less frequently into the second half of the year on the calendar, right? Just generally because it's just generally, we've met the actuary, we've done the lion's share of the work, right? It's just the performance reviews. Do we want to meet a little more
I
frequently.
think the special need for special meeting fills the bill. And that was the whole purpose of trying to go like quarterly meetings or 6 year or what was it?
That's it. That's all that is.
So to have more, unless it's necessary,
I think it's good.
I think it works good.
Okay, it
And
works
when's the
for me.
first when's our first meeting with BlackRock?
I think.
So July is
July,
our,
okay.
July is our next JRIP meeting.
Then when the one after that is that?
I think it's October. Right? July, then October, and then November. That November, December is that annual meeting. So it's,
Does it make sense to have like early on? Because they're gonna be transitioning potentially the portfolio this way. They're going to present us.
right.
first time.
I mean, that's what I'm
First
wondering.
meeting.
Do we put in
Again,
kind of a meet and greet meeting once we get the assets over and just have them do a kickoff? I mean, which we can schedule.
I think that's a wise thing to do. Just
Yeah, a kickoff.
as a manager myself, I know when we launch for a new client, there's a lot of calls and a lot of hand holding for those first couple of months. And I feel like to start the transition and wait 2 months or 3 months from now to really have our first check-in. I think
Feels like a long-
I feel like it feels a long way in the financial world. I think it'd be a little more prudent to meet earlier.
So the first,
Well, so
July's our next meeting.
the 24th or something for the end of July, right? That's the third Wednesday of the month.
We wouldn't want to meet with them until there's been a transition.
Right,
Yeah.
so we'll schedule the transition and then we'll have to get a sense of how the transition goes,
Fair enough.
right? And what's involved and when it will be. And then
You probably send out an email to the group,
Yeah, I got a couple of dates.
propose a date, or you can ask, do you guys want to do it? I mean, I think we're a small enough group that we can be a little
we
nimble.
can do that and try to get, maybe we put that Wednesday, I'm just looking at the third Wednesday of June, right? Or something, just to keep the pattern. We'll find a date, right? Try to get us at
In June.
What?
Holiday nowadays.
Juneteenth.
Juneteenth.
It's Juneteenth,
Great name.
right? That perhaps that will work.
Is the town open?
No, it will not work.
Oh, it's a
Just
federal
mark a holiday.
They have meetings.
Can't meet on
It's a market holiday?
Holiday it is, yeah.
Federal holiday.
True Blue holiday.
We trade a lot of VIX options, which expire on a Wednesday, and that one like kicked it all off, yeah.
I did not know it was a federal holiday.
Look at that. Okay. All right. So scratch that date. All right. Well, when I talk to them and we get a sense, we'll schedule.
Special meeting, we have a different day and.
We'll call a special meeting and we'll do a meet and greet, right? And we'll
Good idea.
let them kick it off and show us what they're up to and right when we get the assets moved over. Okay.
That's good.
That sounds good. That sounds good. So moving on, right, old business, the Milliman work continues on, right? The administrative piece continues on. And it's still targeted, it's moving. We should get an update on that. That's a summer.
Yeah.
Summer project. And then I don't have any other new business, thank goodness. Ben, our intern, are you there, Ben? Still with us or have we got you asleep?
He's on mute.
He's on mute. He's got another, his next task, right?
Yeah.
Yes, is to tackle the website and the archive, which is highly outdated. So we've got.
That of what we don't speak.
No, that which we don't speak. Outdated, all of that material is. And so he's willing to take on that challenge, right, Ben?
Yeah, for sure.
Well, actually, for what it's worth, how hard would it be to simply get these reports uploaded to the website on a regular, just a regular basis?
I don't know.
I don't know. I'm asking it just
It's
openly.
not difficult. I mean, I could send them to Betsy or I can actually upload them myself. I do for the PD
Okay, so you can.
and the commission reports. It uploads to the town and it uploads to the PD website. So
Okay, so sounds like the task is just we figure out what we want to upload, what
Okay.
cadence we want to follow, right? And send it over to you and you can work with Gabrielle and she can,
yeah, we could even have a call. We could
you can
go in. I could even show them how to do.
upload it.
I would think
Backfill.
That's the first question I had, was whether you want to do any backfill or not.
And then you just shipped over 100 documents to BlackRock. Is it just upload that information?
Well, I think that's the question too, is how much do we want to populate? Right, I mean, do we want to do we put all of it on the website or not? I mean. how much
Some of it
public-
has to be up there, right?
I think every
Yes.
town makes different.
Everyone makes a different decision, right?
Yeah, I think the only thing that's really going to BlackRock, I've seen it, would be more like spreadsheets of return data, so they can populate their own performance reports, so you can have a historical look. It was very similar to what we did 4 years ago. We had to get the data from Callan in order to present your performance before we took over. So I think that would be similar for BlackRock. It would be more Excel data.
I,
Start by uploading.
yeah, I would, why don't we,
Could just start by any reports that you have, like, presented to you at the quarterly meetings.
Right, I would think it would be kind of quarterly performance
I was
reports.
just gonna say,
And just figure out what cadence.
just, you know what?
Yeah.
Maybe I'm wrong, and we could also be responsive to the public, but I think, I know when I was off the board for a couple of years, be careful how I say this, but I was somewhat disappointed. I would go and,
Nothing on there.
yeah, there's nothing on there. Well, actually, worse than nothing. There's like this random selection of something between 1 and 10 years old. Right. And so I would, if my suggestion would be we clean the thing off, and let's get everything off there, and then just start putting the quarterly reports on going forward. I don't think if somebody in the public says, hey, I'd like to see something older, we could work with them and get it to them. But I think people will be very pleased to just see a quarterly reports, and assuming there's no space or hard drive issues, just leave them up there. So as
No, they're
we
hard.
we'll build up our own catalog as we do it, right? A year from now, there'll be a year, 5 years from now, there'll be 5 years.
Yep. I
And
think that'd be helpful.
nothing to hide. It's public. Anybody can come to these meetings. I mean, it's their money. So
You'd put minutes, you'd put agendas, you'd put the reports.
Yeah.
The report, or a report.
Exactly.
You'd not put statements because it has account numbers. and you
Oh,
don't-
no, no
Yeah,
statement.
You don't want any of that.
I would just be these.
And put retirement data, it's just
I
the
keep it
flash
simple.
reports.
Flash reports, the minutes and the agenda.
Uploaded with agendas. Typically, it depends on what it is, but if I send over, God, I do minutes for Betsy. I probably send her 5 agendas a month or every couple of months, along with the backups, whether it's a traffic survey for the PD or whether it's the retirement calculations, those all go with the agenda, and there's certain things that have to be public if it's getting talked about on agenda. Reports are one of them, and there's nothing compromising on it, so we can even upload from this most recent one as the last, hey, here's Vanguard's bow out, and going,
Totally.
here's all of our.
Quarter ends, yeah.
So
Yep,
we could-
but that's what we'll do. So Ben, that's what we're doing. Right,
Sounds good.
I guess the only other thing I would add, I think the chairperson should,
Write a statement or a.
no, just sign off. Sign off, yes.
well, what do you
Yeah,
want?
About us.
No, I'm talking about not any extra work. I'm just saying, I think that,
It's all out for Joel or out.
I think just before anything goes up on the website, the chairperson should just say, okay, because we go through these at the meetings, and there may be some instances where we see a mistake or a discrepancy or something we don't like the way it's presented. So I just think it'd be healthy to have the chairperson at the end of the meeting say, this is good, put it up on the,
We just.
that's all.
Approving it, like we do in the,
Yeah.
or
That's a
accepting.
good point. That's right.
Yeah.
We actually just say, is everybody comfortable getting that up on the website? Yeah, that's all.
Okay.
Yeah.
Okay, that works. We can put that into place. Okay,
No book necessary.
no book?
No.
Sure.
Yeah.
I've got so
Right
much
now.
free time.
I know you do.
Love to write it.
And great information.
All right, sounds good. All right, we will get that done. That's the next hill to climb. That's it, guys.
Thank you.
With that, motion to adjourn. First, you've been busy with the motion.
Good luck.
And then,
Thank you, guys.
yeah, just one more time, 4 years,
Thank you.
4 years ago, I was really excited to start working with the town professionally, personally. It's been wonderful working with you all. Make sure you have all my contact information, so.
Great. Good luck to you.
Thank you very much.
Good luck, Brian. Thank you for everything, Brian. Appreciate it.
Thank you, I appreciate it.
Night all.